All right, let's get in some global perspective now. We have Neeraj Seth, who's the founder and CIO at 3R Investment Management, joining in now. Neeraj, hi, welcome to the show. Well, I'm extremely tempted to start the conversation by asking you not about equities, but about gold, which is now at $4,000 an ounce. It's difficult to get your eye off the rates there. But now, do you think that it's probably getting a little oversold at these levels, and maybe one should probably pull back? What's your view?
So I remain positive on gold. I don't think gold is going to lose its shine anytime soon. If you take a step back and think about what's happening in the world, the combination of geopolitical divide, the fiscal deficits that the governments are running in the developed world, the faith on the fiat currency. So gold is playing a role of a safe haven and an alternative currency in people's portfolio. And you do see that diversification element playing through the the central bank reserves across the globe. So you've seen the uptick in the central banks buying gold. You probably will see another wave as the retail obviously chases some of these rallies. So I wouldn't be stepping away from, in fact, involvement in gold. If anything, if I take a 12 to 18-month view, I think there's still upside because it's just changing the nature of what it plays in your portfolio.
Okay, all right. Hi, Neeraj. Good morning and good to see you. And so maintaining a positive bias on gold. I was looking at a couple of data points. The central banks have been buying, but the gold ETF buying actually has lagged. If I compare it, with regard to how much of tonnage they had a few years ago. So that could be another factor, a bit of left out feeling. From around 4,000 tons, I think it came down to around 3,300 tons in terms of gold ETF holding, which is now back to around 3,900 tons. Got that point. So that's about gold. The other point we had chatted about the last time around was the FIs could possibly turn the tide, and come back into the Indian markets. That seems to be playing out. Do you think towards the end of this year, we could see actually FIs turn net buyers in the Indian markets, going by the valuations, going by the underperformance, and going by the FI holding in the Indian markets itself is at record lows? Your take, Neeraj.
So I do think you will see an uptick. Now, there's some constraints. To be honest, you still have to see some clarity with regards to the tariff, the trade deal. And the second is you need to see a little more of momentum building up from an earnings perspective in India, which has been somewhat lackluster. And in addition to that, if you think from a global investor or global allocator of capital standpoint, you have seen a significant rally in China. You're seeing some major shifts in Japan. So there is certainly a competition for capital after a very long time for India that you're seeing on the equity market front. So the turn should be there, but would it be very significant in terms of the flows? I'm not yet sure, but certainly where the markets are in terms of valuation with some correction over the course of last 12 months, I do expect to see the turn here.
All right, you expect to see a turn here. What exactly do you think would cause that turn? Because, the fundamentals of other countries vis-a-vis their valuations are looking a lot better versus, say, something like in India, where fundamentals haven't yet caught up. So what is it that you think will cause this turn?
So two things. One, I do expect to see further turn in the monetary policy. And we had obviously this discussion last few times, RBI had moved to a neutral. I think RBI will ease further. So that's certainly more from a monetary condition standpoint. I do expect to see more in the next 6 to 12 months. And the second is with the GST reforms and expectation of further reforms, given the focus from the government on it to restore growth, you will start to see some of the initial signs of recovery from a consumption and capex perspective. So as I said, you do need to start seeing those signs for the turn in the flows to actually happen.
So what's the incremental EPS growth that you foresee in the second half of this year vis-a-vis the first half, which was a washout?
So I think it's still in the low to mid single digits is what I'm looking at. I don't think right now you have as much of an impulse, which is why you see the flows to be lackluster.
Neeraj, just quickly, there was some profit booking which took place in the US markets. There's this fear that there's this AI bubble which is building up. Is that taking place according to you? Is it the start of maybe some amount of profit booking there?
So I don't think it's a significant profit booking. If you look at where S&P is or the tech stocks are or the AI theme is in terms of performance, it has been stellar over the course of last few years. So small shifts overnight, I don't think really gives you much of a direction. The part that I do with some caution on is that there is some frothiness building when I look across the news flow, the valuations, some of the vendor financing kind of structures showing up. I think there's a little bit of a frothiness building here in the US market on the AI theme. And it's more a question of, again, which companies really show the EPS growth in the next 12 to 24 months versus where it's just a narrative-based valuation. And I think there's some pressure that can come over the next few quarters.
There are various uncertainties, Neeraj, here among the tech names itself, but we have lagged the Nasdaq rally by a margin. Do you think there's a good case that Indian tech companies actually see some kind of bottom fishing at these levels, given the valuations, given the balance sheets, and given the kind of pessimism that's surrounded with regard to these companies? And that's why they have been under-owned. Do you think there's a case out there for the IT rally to actually start here in the Indian markets?
On the technicals, probably yes. On the fundamentals, I don't think so. I still believe the Indian IT services is stuck between the rock and the hard place. Between all the geopolitical divide, the issues around immigration, a number of factors, I still don't see a huge amount of respite coming through unless some of these issues get resolved. Or the companies actually have a pivot towards a business model which is less dependent on US or purely the exports aspect and has a stronger growth attached to it. So some bottom fishing is possible, but would I take a structural view to be positive here? I don't think so.
All right, Neeraj, thanks a lot for that. Appreciate your comments and wisdom on the market right now. You do believe there is a turn in the Indian markets. The second half of this year is where, there could be some sort of earnings uptick that would come by, but no hurry to sell gold right now. You're still fairly positive on it. Wish you a good day.